Good morning, Professor. I will be executing my very first put option trade today, and I decided to do it on Intuit because I did some research on it back in March. And I just feel most comfortable trading a derivative on an underlying asset that I actually understand. Something about Intuit is that it is a cyclical stock, so I have to keep that in mind. First off, I want to talk about the gaps because those really concern me the most. Around this time, Intuit met earnings, but after Trump, after Trump was threatening tariffs, the market sentiment was negative because they just felt like small businesses were going to underperform, and because small businesses are Intuit's largest, I guess, customer base, and most of their revenue comes from them. There was a negative sentiment right after Liberation Day. But thankfully, after Trump negotiated deals with other countries, there was a positive sentiment on the US economy and it went up. Around this time, Intuit also met earnings. So it rallied, it kept rallying, but I think a lot of people didn't notice that clearly this is tax season right here. So that's like the cyclical pattern that we're talking about. This was gonna be the peak of the year, clearly. And personally, I think this downward trend was justified, especially because of the research that I did back in March. I noticed that their cash position deteriorated even after Intuit liquidated a substantial portion of its available for sale securities, which obviously raised liquidity concerns, right? And other profitability metrics such as ROI, ROE, and interest coverage ratio, they declined since the purchase of MailChimp and Credit Karma, which happened years back. The thing about that was that the ROI, those metrics that I just mentioned, they have still not recovered from previous, I guess, levels before the acquisition. And I just think that that's why it's consolidating, right? We're at the end of the year. I mean, notoriously Intuit doesn't perform well in Q4, so I don't really think this rally is super important. I still want to trade a put option. I've actually done many today already, but I'll do another one. I do believe it's going to go down at least in the next 2 weeks, so something safe is 670, strike price of 670. And expiration, each contract is going to cost me 1280. And yeah, confirm and send.